Good day to one and all. This is Dr. Sivaraman of iknowindices.com. I'll be presenting Asian session live market analysis for today, 26th of August. And I'll be giving the forecast for the week 26th to 30th of August. And this is the last week of the month. So the market is known to make some very big volatile moves. And also, the market is expected to show some aggressive moves and such aggressive moves are expected to be on the upside in the case of Euro and GBP. So I'll explain to you with the help of the next slide the expected market moves for this particular week. Okay. Here's the slide explaining the expected market moves for this particular week, 26th to 30th of August. And the three sessions are there in a day of 24 hours market cycle, and which is divided into three sessions. And the expected market moves for each of the sessions is being displayed here. So today, 26th of August, swing and slide move is expected during that of the Japanese session. Swing and rise is expected during that of the European session in the case of Euro and GBP, and also swing and firm up move during that of the US session. So the market is expected to be little more subdued today, and you might get that impression the market might make a false move, or it might be due to lack of volume, etc. But the players are here to hold the market with a narrow range and try to accumulate the buy positions, and subsequently they are expected to make a dip during start of the Japanese session and a quick rise from tomorrow, and swing and quick rise during that of the European session, and swing and firm up hold the higher levels gains during that of the US session. Then 28th they are expected to make the swings, just a nominal swings during that Japanese session, and then a quick dip and a quick rise are expected during that of the European session, and swing and rise move is expected during that of the US session. Then 29th, again they are expected to make a dip and the rise. Then European session they are expected to make a quick rise after the swings. Then US session they are expected to make a dip during start and then quick rise. Then we will come across more aggressive gains from that of the Wednesday, and Friday swing and rise, dip and quick rise are the expected moves. Afterwards, a quick rise and a big drop is expected for the weekend. So they are expected to make a quick drop for the month end and the weekend. That will be 30th of August. So you might come across the market gaining quickly the momentum on the upside, and people might fearlessly take buy positions during the rise, and suddenly on Friday they are expected to do the profit booking move on the downside. So this is the expected market move. So in case if you are holding buy positions, try to book profit on Friday when they are making the quick rises, and then subsequently you can buy back after the drop. Then again next week the market is expected to be very volatile. 2nd to 6th of September, that will be the first week of the month. So they are expected to make the volatile moves again. So this time we will come across this week as well as the next week. Both the weeks they are expected to make sudden volatile moves in the market, and you will not be able to give any sort of reasons why they have quickly made a drop or why they have quickly made a rise. And we may come across some excuses, we may come across some interpretations, etc. But ultimately the players are here to earn maximum during that of the month end and the new month beginning time by hitting the stops in the case of the derivative markets. And also when the options and the futures expire, they will try to make some big volatile moves and try to earn on either side moves of the market. So be careful during that of the last week of the month, and don't accumulate more positions that may become disastrous. Suddenly when they make a move against you, it may lead to overtraded condition, and the margin call fears might be seen. So don't think that the market appears subdued at the given time and suddenly they will bring in more volatile moves during this particular time frame. Then with regard to the levels in which the market could make the rise and the drop, euro is currently shown the level of low as 33.78 and they could come down to 33.50 during the intraday downward stop and then subsequently they are expected to go up to that 1.3575 area. That is the estimated high for this particular week. And here you'll come across the moves of 75 to 100 pips on either side. Suddenly they could make it, and be careful during this particular time frame. You're holding buy positions and try to book profit when they show above 1.35. Then you can re-enter again in the market. Then in the case of GBP, last week we have seen that from 1.56 to 1.55 level it has come, and there are a lot of expectations. It could go to further downward move to 1.54 and things like that, because it went up to 1.57 briefly and then they had just created the bearish peel and dropped it, but this time they are expected to take it up to 1.525 area. This is estimated, statistically calculated level. So they are not accurate level. They are only the range in which or the area in which the market could go. And currently we are seeing the high as 1.5584 and narrow range swing is seen, and subsequently they are expected to gain more levels in the case of GBP when compared to that of euro. In the case of yen, that 97.75 could be the low, and they are just shown 98.59 currently. 98.57 is the low. They have come closer to the low, and they are expected to make a brief downward stop or about 50 to 60 pips or around below 98. They could revisit the gain and then go up to 100.25. And so far the high they have shown is 98.84. And in the case of CHF, they are expected to make some big moves on the upside, and which is evidential when they just briefly cut the high, initial high, and then they are staying above. And also you come across euro is in positive net change, CHF is in positive net change, which is an indication that they are making an upward contrarian move, and they are expected to bring in some good upward move in the case of USD CHF. Then in the case of Canadian dollar, we are seeing that they come up to 1.500 or 1.500, and they could gain another 106.75 pips. 1.0475 could be the low, and 1.0675 could be the high, and they could slowly gain it up to 1.06 area. And in the case of Australian dollar, as I have been telling you many times, that they are going to make only the wide range swings, and Canadian dollar is expected to make the USD gaining move, whereas Australian dollar will be making alternatively the USD gaining and USD weakening move. So avoid taking positions in Australian dollar, because if you take a position in euro or GBP, you will be able to get good profit. And if you think that Australian dollar and New Zealand dollars, they are trading at the lowest level, probably if you take a buy position, you will be able to get good profit. On Friday, you would have noticed that they quickly gained the level in the case of euro to 1.34 and GBP to 1.56, but Australian dollar was lagging behind. So you have to understand how the players are making the moves in the market, and don't expect when euro is rising, GBP is rising, or when gold is rising, Australian dollar has to rise. If they assume and make a relative comparison and try to take positions, you might become disappointed. They may give 25 pips to 50 pips or sometimes 100 pips profit, but you may think that it is really patient testing game when you take buy positions or sell positions in the case of Australian dollar. Now, with regard to the forecast, I explained to you with the help of algorithm. I had derived the forecast, the expected market moves for all the 5 days of the week, and also I had given the range in which the currencies could make the moves in the 4 majors and 2 commodity pairs. Now we'll go to that of the market reading technique, and here we will note down the initial low and the high around 3:30 GMT and try to find out where exactly they are taking up the market. So These are all the initial lows and the highs, and I will compare it with that of the live market. What page now? Now Euro formed the low 1.3378, and which is not breached, and 1.3393 is the high, which is also not breached. The initial lows and the highs are not breached, and you come across a very narrow range swings are happening, and avoid taking positions when they are making such narrow moves. And if the spread becomes more than 40 pips between the high and the low, initial high and the low, or the recent high and the low, then you try to take positions, then you will be able to really see some good profit. In the case of GBP, 55.62 is the low and 55.84 is the high. They are not breached the low or the high. Now you can understand during that of the Japanese session up to 5:30 GMT, they are not breaching the low or the high in Euro, GBP, and also USD. USDN, they just breached the low. 98.49 has become the new low, and 98.57 was the initial low, and 98.84 was the high, which is not breached. So which indicates that they wanted to make a downward move in the case of USDN for the week beginning, and then subsequently they are expected to gain more levels, but only up to 100 this time, and later on they will gain more levels. And in the case of CH, 0.9205 is the low, and 0.9218 was the initial high. They breached it and formed 92.24, and they are holding around that of the initial high, 92.18. So they will be making an upward move, and you know that Euro and USD, when they show positive net change, it is a contrary move. So because USD is a denominator currency, Euro is a numerator currency. Both cannot show positive net change. Slowly they will gain the levels, and as a result, Euro CHF is expected to show accumulated positive net change. So it is expected to slowly gain levels during the day. Then in the case of Canadian dollar, currently trading around 1.05, as I was telling you that it is expected to make more USD gaining moves. When you find that Euro and GBP are holding, USD Canadian dollar is slowly gaining the levels on a daily basis, and they will increase the spread again. They are expected to gain more levels, and the low was 1.0498, it's intact, and the high was 1.0516. So they will be holding here and booking profit of the long positions and try to gain about another 50 pips or so. In Australian dollar, 0.9016 was the low. They made a downward stop to 0.9012 and gone above that of 0.9016 and went above the initial high 9036 and went up to 9044, holding around 9036, the initial high. Now we can understand that how they are using the initial highs and the initial lows as the reference level, which is set around 3:30 GMT. So we need to read their intentions. Then we will be able to find out what they are trying to do. So in the case of Australian dollar, when you see the net change, which is much more than that of Euro and GBP gain. So as you know that any week, during the early part of the week, they will try to gain more levels in the case of Australian dollar when compared to Euro and GBP. And later on, Australian dollar is expected to lag behind, and Euro and GBP will take upward move. So this is how they are doing it in the market. So we have to understand which currency they are handling at a given time and try to take positions. And here again, in the case of Australian dollar, the spread is only 32 pips, still not 40 pips. And in all the currencies you find, the spread is very, very less. So avoid taking any positions at this time. And when they start making a downward stop during that of the late Japanese and the early US European session, and then try to take the buy positions, you will be able to book profit in all the four majors and also Canadian dollar. Australian dollar, you try to see that you do only swing trades. When you take a buy, quickly exit after taking stop at entry. Don't expect a big rise. So as far as the trading strategy is concerned, after making the market reading around 3:30 GMT, we find out whether the market is near the low or near the high. So if we see that euro is now closer to the low, so wait for a brief downward stop before taking a buy. Similarly, in the case of Japanese yen, 98.57 was the initial low. They have come below that, and if they stay below that for more than 30 minutes, you can take a sell, and they will try to make a drop. It might be an extended drop or extended move or an intentional move. Extended move, it just lasts for 2 hours, and then they start reversing it. On Friday, they did it that way. And it can be an intentional move. You have to find out if they stay below that of the initial low for more than 2 hours, then they could drop slowly for 2 sessions and the start of the third session and then reverse the market. Then in the case of GBP, they are holding closer to that of the low, 55.62, and they are expected to make a brief downward stopping during this particular time frame. Then CHF, they are holding above that of the initial high, and they are expected to slowly gain the levels. So it might be looking contrarian when USD yen is showing negative net change and CHF is showing positive net change. Both are denominator currencies. So now you can understand how they can make variable moves in different currency pairs in the same market. So there is no hard and fast rule. They have to all the time do the USD gaining move or USD weakening move. Then in the case of Australian dollar, they breached the initial high, 98.36, and they are staying above. So you can do a technical trade of buy, or when Euro and GBP are making a downward stop, and they will make a dip to 90.36 or slightly lower. In the case of Australian dollar, at that time you can take a buy, but try to finish the trade by tomorrow, not more than that. Afterwards, you'll find Australian dollar really makes a patient testing game when compared to the rest of the currency pairs. So, I'll just for the last slide with regard to how exactly you have to note down the early part and the late part of the sessions. So each session, first 1.5 hours from the start is the early session, the last 1.5 hours is the late sessions. So the early and the late sessions, they handle the majors, and the mid session, they handle the crosses. And wherever in the case of cross, you come across more than 70 pips spread between the high and the low, you can try to take position so that you will be able to book some good profit. But in the case of majors, if they show 40 pips spread above, then you can take positions, you will be able to see quickly the profit. Then they handle only 2 pairs at a given time, and at the moment, if you see that they are handling the CHF and yen, and Australian dollar to a certain extent, but CHF and yen, they are trying to make some good move, and they may make the contrarian move among them. So yen could make a drop again. Still, it is below that of 98.57. See how carefully they are handling it. You watch it. Then you will appreciate what is the necessity to note down the initial lows and the highs, because they are the reference level for their communication purpose. Let me answer to the questions which are asked here. Okay. What is the risk reward ratio with regard to the forecast? So as far as my forecast is concerned, that market is expected to make such moves during each session. And if we try to take the position and try to close it within the session, we should be able to get about 90 to 95% success in the trade. But if we try to hold it for the next day, then at the end of the day, we have to keep stop at entry, because volatility is part of the market. So just because I said that euro will rise, it doesn't mean that it will rise in a straight line. You have never seen that euro makes a rise in a straight line. It has to make zigzag move, and it has to make volatile moves. That's part of the game. In the process, if they try to hit your stop, then you cannot simply say that the forecast is wrong. That is, trading is totally different from the other forecast. So when I say the forecast, then it can be related to that of the time frame. And broadly, it is divided into the short-term forecast and the long-term forecast. But as far as I am concerned, I am giving the forecast with regard to the hourly basis. So it can be for the session for 6 to 7 hours, or it can be for 14 to 18 hours, or 34 hours cycle, etc. So if you take those forecasts into considerations, you will find the swing trades will give you almost 99% success. And also, if you follow the trading strategy and also the market reading, you will find that every trade you are able to get profit. It's not that I am trying to prove that I am great or something like that. I want you to fine tune it and use it according to your requirement and do it. And if I say that success rate statistically, and we know that always there is a clause, no, the past performance does not reflect the future. So it is nullified. So whatever the percentage I give, and if I give a disclaimer that the past performance does not guarantee the future calls, then it is totally nullified. So whatever the percentage I say is only a question of chance. So I do not want it to be that way, just calling that my forecast will be about 50%, 60%, 70%, etc. Instead, I want the trader, anybody who is using it as a guiding factor, to make profit. How? It is not only the forecast, you have to do the market reading on your own so that you will get convinced that I have to stop out this particular trade. Even though the forecast says that euro is going up, at the given time, it is trying to drop, so I'll close it or hedge it. And then try to book profit on the downside. Otherwise, I'll re-enter after the drop if the hedging facility is not available. That sort of decision makings are yours. Then you will find trading is really interesting and not a fear-creating game. It is a really rewarding game. Basin, can you buy GBBN? Okay, with regard to the cross, GBBN, now they already gained the levels. As I explained, the GBP, they are expected to make a downward stop, and USDN, they are expected to make a downward move. So when both become negative net change, GBBN is expected to come down a little more. At the moment, the GBBN cross is around 153.41. It's in the negative net change. As you see, the N crosses are in negative net change. So that means before making a rise, they will be trying to make an extended downward move in the case of the N crosses, and later on they will try to rise. Probably tomorrow after the drop, if you buy GBPN, you will be able to see the profit. So this is how you have to reason out. And you have to get convinced, okay, this is how they make the moves in the market on a daily basis. Then you try to take the positions, you will find it is really rewarding. Simply if you look into that of the levels by comparing with that of the previous levels, previous day levels or previous week levels or the month level, then it becomes a surprise for you. Because today's move is more important for us rather than comparing with it of the previous move. Today, they want the traders to commit positions, being the first day of the week. And also, they want the traders to commit more by giving small swing trades because it is month-end time. They wanted to earn more. So they will pretend as if the market is moving in tandem with the technical analysis, so that the traders will commit more positions. Then they will simply make a reversal move and say it is due to fundamental. That is how they trap. And from J, USDINR forecast. Do you still think that rupee can go back to 50.52? Why 50.52? Even it can become much more stronger below that of 50. And as I explained, if you just look into rupee alone, it might appear to you that it is due to Indian economy or something like that. But if you review all the regional currencies of the small countries, Philippines peso, Singapore dollar, and in Pakistan rupiah, Sri Lankan rupiah, and Indonesian peso. If you try to take all currencies, all these regional currencies are showing multi-year highs. They are at the weakest level because all these currencies are in the denominator positions. Because US dollar is very strong, it is a universal currency. So they are trying to weaken all the regional currencies, not only Indian rupee. So is it due to Indian economy or it is due to the economic conditions of all the regional or small countries in the world? If you question it, then you will be able to understand they are holding the market here, not making any big moves in the case of Euro and GBP, slowly gaining the levels, and they are very busy handling all the regional currencies, bringing in multi-year highs. Afterwards, they will make a very big drop. You know that in the case of, in 2008, they made a big rise in the case of Euro and GBP. At that time, all the other currencies were just sidelined. So that is how they focus on specific currencies and sideline the rest of the currencies with a nominal swing. So you have to find out at a given time what currencies they are handling massively. So they are trying to handle all the regional currencies. So US INR is not an exception. And after always of the multi-year high, you will come across in a short time frame the multi-year lows being formed. In 2008, Euro formed the multi-year high, and 2009, it formed the multi-year low. So they will make one-sided drop at that time. Everybody will get surprised. How come Indian economy or any of the regional currencies economy has suddenly improved so much? So much of dollar inflow will happen. And that is how they play the trick to earn money. And Vikrant, US dollar has a very high percentage of long open positions. Do you still expect USD to go higher as there will be very few buyers? I think it is pertaining to that of INR, US dollar INR. But as I explained that they are reversed, they are expected to reverse. See, the players have got a very big trick. No, they drop the stock market in the regional areas and weaken the currency. And once the currency becomes very, very weak, when they convert $1, they get about 65 rupees or 66 rupees and things like that. And they drop the stock market and enter into the market. At throwaway prices, they buy the stocks. Then they try to rig the stock market, and automatically you find people start talking about the dollar flow, etc. And suddenly the currency becomes very strong, and the players try to take the stock market to the higher level and exit. So this is the double ball game. They do it. So single currency, they use it to weaken the currency and weaken the stock market and enter into that with a high leverage or with the higher income or higher money value for the same dollar, and they try to pump in the stock market. So this is not the only country wherein you come across this sort of moves. All the other small countries, you find the stock markets are being rigged with the help of the local people, and the players have got a big role in that. And no country can do any sort of action. Probably you know that various regulatory agencies, that Reserve Banks of various countries, they tried their level best, but the players are not going to leave it as such. They will try to play with the money power, and it might appear as if those banks are not capable of doing anything, and suddenly you'll find everything reverse without any significant reason for it. And players, will they give any chance to shareholders to book profit on September? Yeah, we come across the volatile moves during early part of September, but they may not make a very big drop. After a gain of 100 pips, they may drop about 75 pips. And another day, 25 pips, and then start gaining again. You see that around 1.33, how they have been carefully holding euro, and then going to 1.34 and dropping it. They are nothing doing that pump and dump moves here, so that no, they rise to 1.34 and sell and drop it to 1.33 area and buy back. So the traders being think that it is a wide range swing trade area, so they buy here and book profit, take sell position, and on the way down they want to book profit. But suddenly they will rise it 1.35, and the short seller will go in for short coverage. This is what normally you come across. The traders who are addicted to trading, they just see the range with the help of the chart, and they try to do a buy here, low, and sell near that of the high, intraday high, and then try to book profit on the drop, and then again take a buy and try to book profit on the rise. So when they are making small swings like that, they will finally take a sell position on the buy position on the downside. They will make one downward stop and make a rise. So immediately they will think that we have to sell around 1.34. Then they will take it up straight upward. So they are very cunning. You have to understand how they are doing it. And I have been explaining many times that they don't do hat trick. That means they do not make similar moves for more than 2 sessions, 2 days, 2 weeks, 2 months. Keep that in mind and try to evaluate on your side. Are you only expecting JB to go down by 25 below? Yes, not much. Okay, fine. So no more questions. Sorry for the delayed start. And there was a technical problem in my side. I apologize for the same. So I'll come back on Thursday. 29th of August and review the forecast what I have given you. So I take this opportunity to thank FXPate and also you people who have come here to listen to my webinar. And you kindly review the forecast as well as the levels given and come back to me with the questions on Thursday. We'll discuss further. Then understand how far the forecast and our market reading is helpful in our trading decisions. Thank you one and all. See you on Thursday. Wish you all very happy week of trading.